Welcome back to the Fourth Revolution, where I discuss stocks for your portfolio of the future. Today we talk about a stock that a lot of retail investors really wanted to be a stock of the future, but is looking less and less likely each earnings report it comes out in recent quarters. And this past quarter was just as disappointing. We had a miss on EPS. The company's still unable to get out of this loss glut. GameStop. It's a company that literally was brought out of the ashes of imminent bankruptcy by a group of Reddit traders on WallStreetBets, and they brought it up, nearly 2,500% in a matter of just a couple weeks, if not less than that. And the stock is remaining buoyant, trading at about $15 billion market cap, up from the $200 million market cap we saw at the depths of the pandemic in 2020. And, obviously this stock is way overvalued, but a lot of this is predicated on the fact or the notion that Ryan Cohen, this new activist investor in the company, is going to transform it from the inside out. So Ryan Cohen previously was the CEO and co-founder of Chewy, which is an e-commerce business. It's really thriving during the pandemic. It's focused on providing, goods for dogs and other pets. And now investors are expecting the same thing to happen at a GameStop, but this latest earnings was kind of discouraging. It showed that the company doesn't have a concrete plan. Their investments, which they got from secondary equity offerings in this market, taking advantage of this massive price spike, 2,400% is nothing to scoff at. And taking advantage of that was very savvy. And they, like I said, they raised over $1 billion in the last 12 months. But it seems to be burning a hole in their pocket. They're not investing in the right stuff. They're investing in distribution centers and just improving current operations, when in reality, they have to make a huge systemic shift towards this digitalized environment that we are in order to stay around. As of now, the company is just headed towards another imminent bankruptcy if they're unable to transition into something different. Honestly, this physical, disc game system, model is antiquated. And you saw it with the business having nosedived since about 2016. And, like I said, they're getting unbelievably illiquid with cash just going out the door. So let's take a look at the charts, take a look where it's trading, and, look at what the earnings were in this last quarter. So this is the GME chart on tradingview.com. You can see this just precipitous drive higher. And this is the epitome of this, WallStreetBets trend, driving out short sellers and driving up the stock with short-term call options that drive this gamma squeeze combined with a short squeeze, which, drove the stock up 2,400% in a matter of 2 weeks of trading, which is just unheard of for a dying brick and mortar company. But like I said, Ryan Cohen catalyzed this with his vision for this company to turn into something that was, something that would allow these nostalgic traders to justify some of this upside. And we just haven't seen it yet. Even yesterday with the disappointing earnings, GameStop was the most talked about stock on WallStreetBets, and they were able to push this thing back up after falling off a 10% cliff in the morning trade. We hit this 50-day moving average and just jumped right back up. And it really doesn't make sense to me. It seems almost irrational. It's like, what else do you want to see to show that this company isn't worth $15 billion? Like I said, in the depths of the pandemic, it was worth $200 million, which is a tiny fraction of this. And this is just continuing to disappoint. Even after this, they raised, over $1 billion in the public equity markets, they're unable to execute with it. It's really just burning a hole in their pocket. So, like I said, I wouldn't touch this. This is a WallStreetBets meme wave that is inevitably going to crash. It's only a matter of time. I would love to see Ryan Cohen come in and transform this thing, but it almost seems like they're going to run out of money before it happens. This company's unable to sustain any kind of profitability, and if they're just investing in the distribution centers in their current operations, it's not going to be a success story, unfortunately. Here's Best Buy, ticker BBY on tradingview.com. You just see the stock just ripping up from these pandemic lows, hitting new highs You know, as we entered the late summer trade, and we've kind of been trading sideways since the end of last August, over a year, over 12 months of sideways trade. And this creates a great opportunity to jump into this leading consumer electronics retailer as it solidifies its place as one of the key retailers amid this fourth industrial revolution. You know, we had this kind of retail apocalypse hit the fan during the pandemic as Main Street businesses went under like there was no tomorrow. And Best Buy has been able to grow record levels of revenue as well as profitability through its omnichannel solutions, which allow customers to buy products through online platforms from Best Buy as well as through its store. You know, Best Buy has kind of become the showroom for these consumer electronics. You know, I thought initially that it was going to be a product or a victim of this retail apocalypse, but it's really proven itself during the pandemic. You know, consumers want to see their products before they buy them. They want to be able to touch them. They want to be able to try them out, and Best Buy provides that conduit. So the stock is currently trading at a below its market value in my mind. You know, we're trading at a P/E of 11.5 times, which is significantly below its industry as well as below its 5-year median, and even its price target. It's trading below its most pessimistic price target of about 115. And like I said, I think the stock is about ready to break out. GameStop has been on a wild ride since February, and I don't see that ride slowing down anytime soon, with this cohort of WallStreetBets traders clearly still interested in the stock. Like I said, it was the most talked about stock on WallStreetBets yesterday, and after its 10% drop off, there was a huge bid, and I'm sure it was these retail investors who saw a value opportunity, despite it looking worse than ever after this earnings. So it's really just turned into a gambling tool, and I would stay away from it unless, of course, you are a gambler yourself. I would keep my hands clean of that, and that was my bull bear of the day. So my bull of the day is Best Buy and its value proposition as we go into the Roaring 20s. They're going to digitalize the world, and Best Buy has become the leader of this consumer, digital electronics retail space. And the pandemic really solidified that as it took out all of its smaller Main Street competitors. So yeah, like I said, Best Buy is my value bear play or bull play for the day, and that goes into our Zacks promotion, which is the Value Investor, run by Tracy Reinick. You can check that out at zacks.com/promo. So thanks for watching, guys. Look forward to seeing you guys next time.